an interesting comment we did get earlier today was from BlackRock CEO Larry Fink, speaking after that company's earnings report, and he said there's a risk of a melt-up right now in the market, which I found very interesting only because what else has already happened this year? It feels like this has been a melt-up rally. How much more melting do we need to do, Larry?
You could do a lot more melting. It made me go back and look at a story that we did last year out of research out of Merrill Lynch from Savita Subramanian. And her research showed that 6 months before a market peaks, you have a 16% gain. 12 months, 25%. 24 months before the peak, 58%. So, even though right now we're sitting on a 16% gain for the year, there could be more actually based on research that is out there. And that's why market timing is so dangerous to leave when you might have a blow off top.
Yeah, and the technicals of this are, everyone was looking after December and being like, maybe we've reached the high already. So when you have Larry Fink saying that we have a melt up, even though we're starting to hit the highs that we saw in September of last year again on the S&P, on the Dow, I think it raises these questions about how much more room is there actually to go. Like Myles said, maybe we've already had the melt up. But when you look at the fundamentals of his argument, I think it's actually kind of convincing. You think about the fact that as the Fed had continued to signal that it would raise rates headed into 2019, again, before the January meeting, you had a lot of people taking all of their money, putting it into fixed income, bearing down, and you have this question about, hey, things are looking all right now. Maybe there's that kind of a pressure in the valve from all the money that's currently in fixed income that can shoot back into equities or some other asset class. So I think that it's a convincing argument. Whether or not it actually turns out to be true, I think is speculation for any other type of technical analysis.
Well, I think what's interesting, though, is that Larry Fink is certainly going to have a pretty good sense of where where money is flowing.
He's got $6.5
trillion. So we have a lot of money going into BlackRock last quarter. But if you look at the full context of his comments, which he made on Squawk Box earlier this morning, he's basically saying, I continue to see folks coming in our doors that are overweight the wrong asset class and underweight the right asset class, meaning you've got pension fund managers or folks who are not that close to retiring, 40, 50% in fixed income, and you're just not going to hit your bogey if that's kind of where your weighting is. And so almost by like the law of investing physics or something like that says if everyone has to get a 7% return, you cannot get it unless you have X exposure to the equity market in the most likely scenario. That's kind of what he's seeing.
And it's just more confirmation of the fact that a lot of people have missed out on the equity rally in the first quarter.
I think
if that's where the flows are.
That's what flows have already said, right? We had this story from Bank of America.
Yes.